Okay, so let's start with a super quick revision of this chapter, that is import and export under GST. We will study import and export under customs also, but before that, let's do it for GST, everyone. Now, since we are talking about import and export, we know that such transactions are considered as interstate supply on the basis of our past things that we have studied. So that's why whatever section numbers are going to come in the chapter, that pertains to the IGST Act. Okay, now here there are going to be 4 parts in the chapter. One is going to be import of goods, next will be import of services, third one will be export of goods, and fourth one will be export of services. Okay, so just divide the chapters into these 4 parts and it will become super simple for you. Okay, now let's start with import of goods first. First of all, we know that whenever the goods are coming into the territory of India, then it is considered as a we can say that bringing of goods into India will be considered as interstate supply, and since it is considered as interstate supply, that will be leviable to IGST. Okay. Now for that purpose, let's try to understand more about it and let's try to relate it with customs. Okay, so whenever we are importing any goods, at that time we already know that customs will become applicable on the same. So along with customs duty on that particular goods, even IGST is required to be paid. Okay, even IGST is required to be paid. Now IGST on the goods which is imported into India, this is levied and collected as per the provisions of section 3 of the Customs Tariff Act. Okay, that does not mean that IGST that we are collecting or the IGST that we are going to pay, that is going to go to the customs department. No. Okay, that is a GST tax only, but that is levied and collected because of the customs law. Are you clear with this? Okay, so whenever this IGST is going to be paid, and this IGST we know that then it is further divided by the government between central government and state government. So depending upon the place of location of the importer, that much portion will go to that respective state government. Right now, this IGST will be levied on that imported goods along with custom duty, additional custom duty, anti-dumping duty, whatever are the levies under customs. Along with that, you have to pay the IGST on that. And yes, in addition, if such goods are luxury goods or demerit goods, then on such goods, even GST compensation cess will become applicable. Okay, now the next thing, when are we supposed to pay this IGST? This IGST is required to be paid when custom becomes payable. Okay, whenever custom tax becomes payable, at that time we are required to pay the IGST. So ma'am, when is custom tax required to be paid? Customs is required to be paid at the time of clearing the goods from customs, that is at the time of filing the bill of entry. And to be very specific, at the time of filing X bond bill of entry. Okay, whenever we are filing X bond bill of entry to the custom authority, that sir, now we want to take our goods. Okay, at that time they will determine the value, and on that value we have to pay the customs, and at that time itself we have to pay the IGST. Okay, now the most important thing, on what value are we required to pay the IGST or the GST compensation cess? So whatever value is determined for the purpose of customs duty, okay, value as per customs, plus add the customs duty, any anti-dumping duty, additional duty, safeguard duty, whatever taxes are there under customs, excluding IGST and GST compensations, because that is what we are calculating here. So value of the goods as per customs plus all the custom taxes that has been levied on you. This total amount, we are required to pay the IGST, and on this amount itself, we are required to pay the GST compensation cess. Are you clear with this? Okay, then another point is, sometimes it so happens that when I am importing the goods here in India, at the time of import, I don't want to clear it immediately for home consumption. Means I don't want to take the goods out of customs for some time. Okay, so I have an option to keep the goods in custom bonded warehouse. Okay, warehouses coming under the customs authority, I can keep the goods there. Okay, when I am keeping the goods there, at that time I have to file a document called as into bond bill of entry. Okay, at the time of just keeping the goods in warehouse, okay, I'm not taking the goods in my office, I'm just depositing it in the custom bonded warehouse. At that time I have to file a bill of entry. Importer is required to file a bill of entry called as into bond bill of entry. Okay, by filing this into bond bill of entry, at that time only the valuation is done, that what is the value of the goods, and then you can keep the goods in the custom bonded warehouse without paying customs duty. Okay, no need to pay the customs duty now. Why? Because customs duty will be payable, or the IGST on that will be payable when the goods are cleared for home consumption. Okay, later. Now the goods are kept where? The goods are kept in the warehouse. Now, when the goods are kept in the warehouse, the importer, let's say the importer has sold it to some other person. Okay, if the importer is selling it now to some other person, then in such a case, and later this such other person is going to clear the goods for home consumption, the liability to pay the custom duty and liability to pay the IGST is going to be on whom? The liability is going to be on such a person who is going to later clear it for home consumption. Are you clear with this? Okay, so suppose if before the goods are cleared for home consumption, if I have sold the goods to someone else, okay, then this transaction is not considered as a supply. This we have already seen in schedule number 3 of the CGST Act. So ma'am, does it totally become tax free? Array, it does not become tax free when this person to whom I have sold, okay, when that person clears it for home consumption, the liability to pay customs, the liability to pay GST is going to be on that other person. Okay, and listen, when we deposit the goods in warehouse, at that time we have to file into bond bill of entry. Okay, but when this person is going to clear it for home consumption, at that time that person is going to file ex bond bill of entry. Are you clear with this? Okay, till that time the goods are not cleared for home consumption, till that time you are not required to pay any customs, till that time you are not required to pay any IGST. Okay, later when that person clears it for home consumption, now he will have to pay the customs. Okay, he will have to pay the custom duty also, and he will have to pay the IGST. Now, on what value IGST will be payable now? Okay, IGST will be payable either on the transaction value, that is the price at which I sold it to the ultimate buyer. Okay, the price at which I sold it to that particular buyer, that value, or the value determined at the time of filing the into bond bill of entry. When we file this into bond bill of entry, I told you that valuation will be done. So that value plus all the custom duties, excluding the GST. Out of these two, whichever is higher. So either the valuation which was done at that time or the value at which I have sold it to the other person. Out of these two, whichever is higher, on this amount, IGST or the GST compensation cess will be payable. Are you clear with this? Okay, suppose if there are many people in the chain. Okay, example, importer sold it to Mr. X, X sold it to Y, and Y sold it to Z. It can happen before the goods are cleared for home consumption. Okay, then in that case, whatever is the last transaction value, means the price at which Y has sold it to Z, that value, or the valuation done by the customs at the time of into bond bill of entry plus the custom duty. Out of these two, whichever is higher can be taken for the purpose of calculating the IGST. Okay, suppose if only partial goods are sold, so at this point of time the taxes will be applicable. Everything will be done proportionate. Okay, transaction value will be only for the proportionate goods. Okay, and this into bond bill of entry value will also be now calculated only for the proportionate goods. Example, if the value was 10 lakh rupees for total 10,000 kgs of goods, but now the transaction is happening only for 2,000 kgs of goods, so just do the proportionate calculation, and out of those two, whichever is higher, on that value your IGST and GST compensation cess will become applicable. Are you clear till here? Yes. Then going on to the next one, that is high sea sale. Okay, let's say I am importing the goods from the other country and the goods are in waters. Okay, it is coming by ship, by vessel, and the goods are still in waters. They have not touched India. Okay, the goods have not yet touched India, and by the time the goods are in water, okay, during that time I sell it to someone else. Possible? Yes, possible. So in that case, again, I am relieved of all the liability of customs and GST, and the high sea sale buyer, okay, high sea sale buyer, the person who has purchased from me, that person will be liable to pay the customs as well as the IGST. Are you clear with this? And whatever is the transaction price, okay, whatever is the price at which that buyer has purchased it, on that price customs will also be payable, and on that price IGST will also be payable. Are you clear till here? Yes. Then going on to the next type of imports, that is third party shipments, third country shipments, sorry. In case of third country shipment, suppose if I wanted to sell it to some other country, okay, I wanted to sell it to some other country, but I have told Mr. C, who is in the third country, to directly give it to B. Okay, I am here in India. Mr. B is in US, Mr. C is in UK. Okay, original transaction was between A and B. Okay, but the goods are going to go from C to B. Means I have told C that please send it to B. Then such a transaction will not be called as import or export transaction. Like vice versa thing can also happen, right? This transaction cannot be called as import export transaction because the goods have not at all touched India. Are you clear till here? Then after that, the next one, that is taxability of goods imported by SEZ. This is again very important. They are telling us that whenever any SEZ unit or whenever any SEZ developer, when they are importing any goods, okay, their main purpose is going to be export only. So whenever they are importing any goods, okay, for authorized operations, then it will be totally exempted from IGST because they are doing good for the country. Okay, similarly, whenever any goods are imported by EOU, export oriented unit, okay, when it is imported by EOU, then it will be normally attracting the customs duty. Okay, but when the goods are imported by 100% EOU, whose total turnover is going to be export only, then this is going to be totally duty free. Okay, so there is a difference. When it is imported by EOU, tax is applicable, but when it is imported by 100% EOU, then it is going to become duty free. And last, whenever you are importing anything as baggage, okay, whenever you are importing something as baggage, at that time GST is not applicable, but customs will be applicable if it exceeds the duty free allowance, but GST is not applicable, right? Acha. Now, for the purpose of import of goods, now let's say if you are importing any taxable goods, okay, if you are importing any taxable goods, then obviously you would be registered under GST, so that GST number can be used as your import export code. Okay, and suppose if you are engaged into the business of non-taxable goods or nil rated, exempt, and you had not taken any registration under GST, then still can you import goods? Yes, import can be done at that time. At the time of import, just quote your PAN. Okay, permanent account number can be quoted as import export code. Are you clear till here? Okay, this was first part of the chapter which was talking about import of goods. Okay, now going on to the second part of the chapter, that is import of services. Okay, part of it, maximum part of it we have already studied. What do you mean by import of goods? Okay, now whenever we know that whenever any particular transaction needs to qualify as a supply, then two tests should be done. One is there should be a consideration, and second one, it should be in the course or furtherance of business. Okay, so similar thing applies for supply of goods also and for supply of services also. Okay, but here we are specifically talking about import of goods. Okay, and in section number 7 we had seen that in case of import of goods, consideration is mandatory, but even if it is not in the course or furtherance of business, that is okay, whether or not in the course or furtherance of business. Okay, so whenever we are importing any service for some consideration, whether or not in the course or furtherance of business, it will be called as import of services. And we had seen one more point, that if we are importing any services from a related person or from our establishment which is located outside India for free, but if it is done in the course of business, then even that will be called as supply, right? Even that will be called as supply, and therefore it will be considered as import of services. And if import of services is happening, then it is considered as interstate supply. At the time of import, reverse charge mechanism becomes applicable, and the importer here, recipient here, is required to get himself registered and to pay the taxes under reverse charge mechanism as interstate supply. This is a normal thing. Okay. Now, two things here is, one is about OIDR services, which we have already studied. Two things extra we have to study. One is about OIDR service and the other one is about e-commerce operator. Okay, first let me tell you about OIDR services. Now, OIDR services we have already studied. Any services which are provided over internet by, using information technology, and such services are impossible to provide without information technology, then those services are called as OIDAR services. Now, if OIDR services are provided from outside India to India, and if it is received by non-taxable online recipient, NTOR, okay, if it is received by NTOR, imagine a small college going person takes the subscription of Netflix, then that becomes OIDR services received by NTOR. In such a case, the supplier of that service is required to pay the taxes here in India. Means he will have to get himself registered here in India and pay the taxes. Okay, but in all the other cases, okay, if suppose OIDR services are received by business entity, then in that case, normal reverse charge mechanism will apply and this business entity is required to pay the tax. Okay, so normally in all cases of import of services, the recipient is liable to pay the taxes. Okay, but in case of OIDR services provided to NTOR, in such a case, the supplier is required to get himself registered here in India, or he can appoint his authorized representative or a person here in India who will be liable to pay the taxes. Are you clear till here? Okay, so normally just remember, apart from OIDR, just remember whenever there is import of services, the recipient here, the importer of services here is required to pay the taxes under reverse charge mechanism. He will pay the taxes under reverse charge mechanism and then he can take the input tax credit of the same. Are you clear till here? Okay, and last point, that is about e-commerce operator. Any e-commerce operator, if there is any particular person who is importing any services through e-commerce operator, okay, and if e-commerce operator is providing these services through its portal, if there are any services provided through e-commerce operator located outside India, okay, if there is any e-commerce operator located outside India and through that person, if we are providing any services, then in such a case, the tax liability is going to be on the e-commerce operator. He is required to get himself registered here in India. Are you clear with this? So again, to conclude, if suppose there is any import of services happening here in India through e-commerce operator who is located outside India, then the liability to pay tax is going to be on that e-commerce operator, and the e-commerce operator is required to get himself registered here in India either by itself or through AR or through any other person, and that person will have to pay the taxes here in India. Are you clear till here? Yes, and because here in import of services, we had seen it in the registration chapter that for any persons who are required to pay tax under reverse charge mechanism, those persons without any threshold limit, they have to get themselves compulsorily registered, except for NTOR. Okay, NTOR is not liable to get himself registered, but otherwise in all the other cases, registration has to be done. And in case of importation of services, like I told you, ITC has to be paid. Okay, like the tax has to be paid on reverse charge mechanism, and after paying the tax, you can take the input tax credit of the same, right? Then going on to the next big part of the chapter, that is exports. Okay, in case of export, we know that we have to do exports so as to make our economy good. Okay, but one very important thing that has been decided between countries is whenever you are exporting, whenever any particular country is exporting the goods, you should not export taxes. Okay, so you cannot collect taxes from the other country at the time of exporting goods or at the time of exporting the services. So ma'am, we cannot collect the taxes from them. Does that mean the exporter has to bear the burden? Okay, for that purpose they introduced the concept of zero rated supply. Okay, in zero rated supply, two types of supply are included. One is normal physical exports. Okay, one is physical exports, that is normal exports, sending the goods outside India, etc., or normal exports, physical exports or normal exports you can say. And the next one is whenever any goods have been sold to SEZ unit. Okay, DTA selling goods to SEZ unit or SEZ developer, because they are going to further export it. So these supplies are called as zero rated supply. Zero rated supply means it is totally exempted from tax. Okay, it is not an exempt supply, it is a zero rated supply, but no tax in the entire chain. Ma'am, how no tax in the entire chain? Now they are telling you have got two options under zero rated supply. Okay, what are the two options? Any person who is making this zero rated supply, means any person who is exporting the goods, that person can export the goods or services under bond or LUT, means they will sign a declaration, etc., and they will export the goods. And what benefit the government is going to give to that person? That without paying any IGST on such export. Okay, means on your outward you need not pay any IGST, and on your input, if there is any ITC available with you, we will give you a refund of the same. So can we say my export, my outward is also totally gone and my inward is also totally gone. Gone means No tax is required to be paid. That's why it is called as a zero rated supply. This is first option that everyone would like to avail, because here you need not pay any tax, no blocking of working capital, etc. Right. And the second option is, suppose if you don't want to go for this LUT or bond, then in some cases, there are some notified class of persons, or in case of some notified goods or services, you are required to export the goods by payment of IGST. Means government will tell you that when you are exporting the goods, you don't collect anything from that other country, okay, but you pay the IGST from your pocket, okay, by utilizing the ITC, etc. That is okay, and then later we will give you a refund of the same. Okay, so whenever the government wants to be sure about you, at that time government will tell you to take this option. Otherwise, LUT or bond is a general option which is available to every registered person. Are you clear till here? Yes. So these are the two ways because of which export zero rated supply has been totally made zero from, it has been made totally zero from the taxes. Okay, full benefit is given to you in case of exports. Okay, now see here, there was an amendment which was recently introduced by the GST law, that this option of now paying the taxes and then getting the refund, this is not available to these below goods. And all these goods, all these relates to tobacco and pan masala, tobacco, pan masala and all those things. It relates to all those things. Okay. So for these goods, you don't have the option to pay the GST and then take the refund, because these are such goods which we are not promoting. Are you clear with this? Okay, then going on to the next one, that is zero rated and exempt supply. What is the difference between zero rated and exempt supply? This is actually a conceptual thing. Okay, zero rated supply means we know export of goods or services or supply to SEZ. Okay, supply to SEZ unit or SEZ developer, that comes under your zero rated supply. And what comes under exempt supplies? Three things, na? Nil rated supply, then supplies exempted by way of an exemption notification, and non-taxable supply, petrol, etc. Okay, all these three things come under your exempt supply. Now, basic difference. Okay, in case of zero rated supply is actually a tax-free kind of a supply, where the government has given you the benefit that you pay the tax and get the refund, or you sign the bond LUT and then no need to pay the taxes. Whereas and one more thing under zero rated is, you pay that, there is no taxes on the outward supply, and whatever taxes you have paid on input tax, we will give you the refund of the same. Whereas what happens in case of exempt supplies, there is no outward tax. Okay, but there is inward tax, and on that inward tax you do not get the input tax credit, and because of that your costing increases. Okay, so no ITC is available on exempt supplies, but ITC is available on zero rated supplies. Okay, and for the purpose of rule number 42 and 43, rule number 42, 43, ITC reversals. Okay, for that purpose, exempt supply credit will be reversed. Okay, but zero rated will be considered as taxable supplies. Exports are considered as taxable supplies for the purpose of apportionment of IDC. So any inputs relating to zero rated supply, for that the credit does not get reversed. Are you clear with this? For making zero rated supply, because you want to claim the refund of the ITC, etc., you need to get yourself registered. But in this case, in case of exempt supply, even if you don't get registered, that person is not liable for registration. In case of zero rated supply, you are required to issue a normal tax invoice. Okay, because it is not exempted, it is zero rated. And in case of exempt, you are not allowed to issue a tax invoice, you have to issue a bill of supply only. Yes. Okay, now let's start with export of goods. Okay, export, two things we have to do. One is export of goods and the other one is export of services. Under export of goods, first part we have already considered, that is your physical export. That is when the goods cross 200 nautical miles from the baseline, then we can say that goods have been exported from India. Okay, but do you recollect one of the circular that we had studied in one of the previous chapters? When you are taking the goods outside India for export promotion, for the purpose of exhibition, for the purpose of promotions, etc., then that is not considered as a supply. Okay, because till now you have not sold the goods. Okay, only when you sell the goods, then only it becomes a supply. So till the time it is not a supply, it cannot be even called as a zero rated supply. Okay, you can call zero rated supply to a particular transaction only when in the first place it is a supply, right? Okay, then talking about the second thing, that is deemed exports. Okay, now from the name, as you can understand, deemed exports means actually it is not an export, but law has told that if you are doing these domestic transactions also, then too it will be called as deemed exports. Okay, generally here 4 types of transactions are covered: A, B, C, D. Okay, now when I am supplying the goods to you, okay, we both are in India, I am supplying the goods to you, and you have got some advance authorization from the government for exporting these goods further. Okay, means I am supplying the goods to you and you are going to export it further under advance authorization, which we will study in FTP chapter. Then my transaction to you or my sale to you will also be considered as deemed export, even though we both are situated here in India only. Okay, similarly, when I am supplying you some capital goods which you are going to use for manufacturing any export related goods, okay, under EPCG scheme, export promotion capital goods authorization, then when I am supplying you this capital goods, that transaction will be called as deemed exports. Okay, then similarly, when I am supplying some goods to EOU, export oriented unit, which is going to export it further, then when I am supplying it to the EOU, we both are situated here in India, still this transaction will be considered as deemed export transaction. And the last one, which is a very specific transaction, whenever any bank or PSU or okay, whenever any bank or public sector undertaking supplies gold to any other person against advance authorization, then whenever the bank is supplying it to other person who is situated here in India only, then even this transaction will be considered as deemed export. Okay, so even if the supplier and the recipient is situated here in India only, further it is going to be exported, okay, or further the government is going to get some benefit out of it, then in such case such transactions will be called as deemed export. Yes, but one important thing here is deemed exports cannot be done under bond or LUT. Okay, in this case, whenever you are doing the supply to the other person, please pay the IGST, because it is deemed export, it will be interstate supply, so please pay the IGST and then take the refund. Okay, but here we cannot trust on the bond or LUT. Okay, now can we say, since your IGST is payable, so either the supplier will pay from his pocket and will not give the burden to the recipient. This is one thing. Okay, or else normally the supplier will charge it from the recipient and will pay it to the government. So here it has been borne by the recipient. So any one of them can bear this particular IGST, because anyway they are going to get the refund of the same. So they are telling that whoever pays the IGST then can later on claim the refund. Okay, either it can be claimed by the supplier or it can be claimed by the recipient. Are you clear with this? Okay, then going on to the next type, last type of exports, that is your merchant exports, which is very, very simple. Okay, now let's say I am a manufacturer exporter. Okay, I am a manufacturer exporter. Manufacturer exporter means I just manufacture goods for the purpose of some other person who is going to export it further. Okay, I am a manufacturer exporter, and then there is a person called as merchant exporter, whose work is only to do export. Okay, whose work is only to do export. He is not a EOU. He is not doing it under advance authorization. He is not doing it under EPCG. Okay, that's why he was not covered under deemed export. So now this person is having specialization. This first person is having specialization in manufacturing. This person is having specialization in exporting the goods. Okay, and this person is going to then export the goods outside India. Are you clear till here? Yes. Now see, what are they telling us here is this: if you want to get the benefit of merchant exports, okay, if you want to get the benefit of merchant exports, this merchant exporter should export under bond or LUT. Okay, he should export it under bond or LUT. So what benefit are we going to give? Can we say if he is going to export under bond or LUT, he is not required to pay any tax, and whatever are his inputs, whatever are the inputs of this merchant exporter, he will get the refund of the same. Okay, that is a normal export benefit that is given to this merchant exporter. Okay, now what benefit will this manufacturer get here? Okay, this manufacturer, when he is doing the supply to the merchant exporter, there is only a tax of 0.1% applicable on its outward. Means when this manufacturer is selling it to the merchant exporter, it will just collect 0.1% tax from this merchant exporter. Are you clear with this? Okay, a very small amount will be collected from this merchant exporter and as its outward supply. But can we say input of this merchant exporter can be high? Okay, input rate, can this be at 18%? My inputs are coming at 18%, but I am selling the goods at a very smaller rate of 0.1%. So here this merchant exporter can claim the refund. Okay, 0.1% is my outward, minus 18% is my inward. So can we say there will be some input tax credit left for this manufacturer exporter that can be claimed under, inverted tax structure. Okay, I had mentioned about this inverted tax structure earlier also. So this transaction is also considered as an export, and this transaction is considered as merchant export. Okay, so can we say this has become totally tax free for the merchant exporter? Okay, and like on outward, it is just required, almost it has become tax free. It is just required to pay a tax of 0.1%, which also it is going to collect it from the merchant exporter, and merchant exporter can take the input tax credit of the same. Okay, but very important thing here is this merchant exporter will have to export the goods within a time period of 90 days from the date of issue of invoice by merchant exporter. Means the day when the 90 days from the date of invoice issued by the manufacturer exporter. The day when the manufacturer exporter gives the invoice, okay, from that day within 90 days the export should be done outside India. Are you clear till here, everyone? Yes, so this was the main provision. Okay, and one more thing very important which is coming up here is whenever you are doing this transaction of merchant exports, there should be no shifting of goods from one place to another place. The goods should directly go from this manufacturer's premises to the custom port. Okay, means the merchant exporter cannot also take the goods in his premises. It should directly go from the manufacturer's premises to the custom port, to the custom airport, custom land station, etc., or custom bonded warehouse. Don't keep the goods here and there. Okay, directly it should be exported from there. Are you clear with this? Okay, so three types of exports that we saw here. First one was your normal physical exports, or you can call it as normal exports, and plus any sales done to or any supply done to SEZ unit or SEZ developer for authorized operation. For that normal LU2 option, that will be considered as zero rated supply. Okay, this is considered as zero rated supply. So in that colorful chart we had seen two options are available, LUT bond or payment of IGST. Okay, next one is your deemed export. Deemed export were those four things. Advanced authorization was first one. Next one, capital goods under EPCG scheme. Third one was what? Supply to EOU, and the fourth one was that gold under advanced authorization, and the last one is going to be your merchant exports. Okay, merchant exports is manufacturer to exporter, exporter to outside India. Are you clear with this? Okay, in this special point that we studied here, this can be under bond or LUT, or this can be by payment of IGST. But in case of deemed export, it has to be on payment of IGST, and in case of merchant export, it has to be on LUT or bond. Are you clear with this? Yes. Okay, then going on to the last part of the chapter, that is export of services. Okay, export of services is very simple. We have already studied this. Definition before also. Export of services. When will a supply be considered as export of service? When the supplier is located here in India, recipient is located outside India, place of supply is outside India, consideration that we are going to get, that will be either in convertible foreign currency, or in some special cases it can be even received in Indian currency if permitted by the RBI. And these two parties, the supplier and the recipient, should be two separate entities. Okay, they should be two separate entities. If all these conditions get fulfilled, then such a supply will be called as export of service. Okay, now for this we have to study two circulars, which is very important. Okay, before I take up the first circular, I want you to do the second one. Okay, one point which I just told you in the definition of export of service, that is under section number 2.6. One of the point which I told you was the transaction between the supplier and the recipient will be considered as export only when these two parties are separate entities. Okay, separate entities. Now let's say I am the holding company and the other company is a subsidiary company, means these two are two separate entities, then that can be considered as export of service. Okay, but if I am the head office and the other one is a branch, then we are same entities, then this will not be considered as export of service. Okay, but in that only they have given a clarification. What if you are the head office here incorporated under Companies Act 2013 and your branch is incorporated outside India as per their laws? Okay, means we two are operating in two different countries under two different laws, then we will be called as separate entities. Okay, but what if my branch is not incorporated? If it is not incorporated outside India, means it is India's part only, means we are same. But if these two are operating under two different laws, means these two will be considered as separate entities, and only if these two are considered as separate entity, then only any transaction between these two will be considered as export of service. Are you clear with this? That is given under this B clarification, B circular, and A circular is also a very nice circular. Now let's say I am here in India. Okay, Arpita is here in India. She has got an order from USA for export of some services. Okay, I am going to do some export of services to USA. Are you clear till here? Yes. Now, and the amount agreed is, let's say for example, 100 lakh US dollars. Okay, this is the consideration that has been agreed. Now, this is a very big order for me, okay, of export of services. So, I took the help of some other person. Okay, I took the help of some other person who is situated in US, and I told him, can you help me to finish this order? So, he said, okay, I will help you, but for this, you have to pay me. For this, you have to pay me 20 lakh US dollars. I said, okay, fine. So basically, can I say I have subcontracted this work to one of the person for getting my order fulfilled? Okay. Now, I took the permission of the RBI and I asked the RBI, sir, I am going to receive 100 lakh US dollars from USA and then I have to pay 20 lakhs to USA again. Can my US client directly pay 20 lakh USD to that US person and pay me the balance 80 lakh USD here in India? RBI said, okay, no problem. Okay, taking permission is mandatory. Okay, so ultimately, basically I got 100 lakhs and I paid 20 lakhs. So net I am left with 80 lakh US dollars. Okay, now here the question arises is, what will be the value of export? What will be the value of export of services? Like, will it be the original value of 100 lakh US dollar, or will it be the value that I have got, that is 80 lakh US dollar? So it has been clarified by this circular is, value of export is going to be 100 lakh US dollar only, because that was your original value, and that is the value of service that you have actually given to that other country. And this 20 lakh will be considered as import of service. Right now, because I have taken the service from US, so this 20 lakh US dollar will be considered as import of service. Okay. And on this import of service, under reverse charge mechanism, Arpita will have to pay the IGST and then she can take the credit of the same. Okay, so value of export, you cannot deduct it by 20 lakh US dollars and you cannot say that, okay, net of net, 80 lakh US dollars. No, value of export is going to be the original contract value only. Are you clear with this? Okay. So this was all about the circular's clarification. This is the same diagram that incorporated in India or incorporated outside India, etc. The same example which I had given you. Now a few common provisions which are coming up here. First point we have already done. Any supply done to SEZ unit or SEZ developer for authorized operations. For authorized operations will be considered as zero rated supply. Similarly, this point also we have studied earlier in one of the chapters before, that if there is any services provided to SEZ, okay, and if the supplier of the service and if SEZ, both of them are situated in the same state, and if the service relates to service of immovable property, then we had studied in the place of supply chapter that the place of supply will be the location of the immovable property. Suppose if location of immovable property and the supplier, location of the supplier and place of that immovable property is in the same state, then normally as per POS provisions it will be called as intrastate supply. Okay, but here can we say specific provisions will override, because if we are providing any services to SEZ, that will be considered as intrastate supply even if all of them are situated in the same state also. Right, then after that, any transaction with EOU, this we have already considered. If we are doing any transactions with the EOU, then that was coming in what? That was coming in your deemed exports, and in deemed exports LUT bond was not allowed, so you have to pay the tax and then take the refund of the same. Are you clear with this? Okay, now see what is the procedure for bond or LUT. Okay, how does bond or LUT operate? So bond or LUT is basically a guarantee, okay, or an undertaking that you are giving to the government that if at all we default, don't worry, we will pay your tax on export. Okay, along with interest. This is one of the undertaking that we are giving it to the government. So if at all we fail to export the goods out of India, okay, or if in case of services, because services is intangible, okay, in case of goods, if you actually, okay, you have taken all the export benefits, but you are actually not exporting the goods out of India. Okay, so can we say this is loss to the government because government has not taken any tax from you? Okay, or in case of services, you have given the services, but the consideration is not received within the permitted time of RBI. Then in such cases, what will you write in the bond or the LUT? You will write in the bond or the LUT that, sir, within 3 months, okay, we will wait whenever the goods were exported, and for that whenever the invoice was made. So from the date of invoice, within 3 months, you are required to export the goods. Okay, similarly, in case of services, from the date of invoice, within 1 year, you are required to get your money back. Okay, if it is not done, respectively, for goods within 3 months or for services within 1 month, if your export is not done, or here if the payment is not received, then within 15 days from this time period, okay, within 15 days from this time period, you promise, okay, you promise this bond or LUT you had given earlier only, okay, now within 15 days you will have to pay the tax to the government along with interest. Okay, and when are you supposed to sign that bond or LUT? Before doing the export. Okay, before doing the export itself, you are telling that, sir, if we do a default, okay, in case if we are not exporting the goods, or in case of services, if we are not able to receive the money within the permitted time period, then in such a case, within 3 months from the date of issue of invoice in case of goods, or within 1 year from the date of issue of invoice in case of services, within that much time, if we are not able to do it, then within 15 days we will pay you the tax along with interest at the rate of 18%. Are you clear with this? Yes. Okay. Acha, now this is one thing. Okay, these are basically two things I should say. One is in case of export of goods, what default have I done? The default that I have done is I have taken the export benefits, but I have not exported the goods outside India. In case of services, I have given the services, but I have not received the consideration from the other country. Okay, or sometimes can it also happen that you had signed the bond or LUT where the government allowed you to make the export without payment of taxes, and you have taken the refund of your ITC also. Imagine you have taken the refund of the ITC and you have not exported the goods now. So that is again a loss for the government. So if at all you have got the refund from the government of your ITC, then please refund it back. Okay, please refund. And suppose if you have not received the money, if you have not realized the export proceeds from the other country within the time permitted under FEMA provisions, then within 30 days, whatever ITC refund you have taken it from the government, please pay it back to the government along with interest. Are you clear with this? And suppose if once if you have done this default, okay, suppose if once you have done this default, that is you have not exported the goods, and if you have not paid the tax to the government along with interest, etc., then your LUT or bond facility will be withdrawn. Okay, LUT or bond facility will be withdrawn means what? LUT or bond facility will be withdrawn means what? Means next time if you are doing the export, then you have to pay the IGST and do the export. Okay, ma'am, is it withdrawn permanently? No, it is not withdrawn permanently. Till the time you rectify the default, till that time it will be withdrawn. Later on, you can again start using this bond or LUT facility. Are you clear with this? Okay, ma'am, is there any difference between bond and LUT also? Yes, there is a difference. Okay, LUT is a very simple thing. LUT, letter of undertaking, is just a document that you have to fill it on the GST portal where you say that, sir, if I do any default, I will pay you the tax along with interest. You just submit that LUT. Acknowledgement that is generated, that will be considered as if your LUT is approved. Okay, and once if you file a LUT, that is valid for the entire year. Okay, that is valid for the entire year. So here you don't have to give any bank guarantee or any of those things. But in case of bond, okay, but in case of what? So everyone tries to submit LUT only. Okay, but there are some people who are not allowed to issue not allowed to authorize LUT. Who are those persons? If there is any person against whom prosecution case is going on under GST and the amount involved is more than 2.5 crore, means there is a case going on against that particular person and the amount involved is more than 2.5 crore, then we cannot rely on your LUT. Then in that case you will have to sign a bond only. Okay, that is the only one exception where LUT is not allowed but bond is allowed. Bond has to be given. Okay, ma'am, what is so difficult about bond? So whenever you are giving a bond, you are kind of giving a bank guarantee. Okay, bond has to be signed of what amount? Whatever is your tax liability of exported goods. Okay, plus you have to give a bank guarantee of 15% of the value of the bond amount. Okay, let's say I have exported the goods on which IGST payable is equal to 100 lakhs, for example. Okay, so bond amount will be of 100 lakhs plus I will have to give bank guarantee of 15 lakhs. Okay, so this is a little more tedious than your LUT provisions. Okay, so normally they say, everyone here, just try to understand. Okay, just try to understand. In case of your export, I'll just simplify it for you. In case of your export, in case of zero rated supply, that is normal exports. Okay, you have got two options. LUT or bond is an option which everyone tries to use. Okay, or otherwise you can pay the IGST and then take the refund. Right, then after that, for your deemed exports, in deemed exports they have made it very clear that you have to pay the IGST, then we will give you the refund. Okay, and in case of merchant exports, they have again made it very clear that export has to be done under LUT or bond only. Okay, now ma'am, wherever we have to pay IGST, it is very clear. Now what about LUT or bond? So wherever LUT or bond is coming, first priority is always given to LUT because it is simple. But the persons who have to compulsorily go for a bond is where prosecution is going on, amount involving 2.5 crore. Okay, are you clear with this? So those persons will have to give bond, otherwise you can go with LUT. LUT, if you have to, even if you give one LUT in the entire year, that is more than sufficient. Are you clear with this, everyone? Yes. Okay, one more important point which I would like to tell you from here. Okay, one more, this validity of LUT we have already done. How to file the LUT, that will be filed on the GST portal. Acknowledgement number will be generated. That is, once the acknowledgement number is generated, means your LUT is submitted. No need to go and physically submit any documents. Okay, later if suppose if you have filed the LUT and later they come to know that you are not eligible for LUT, you are a prosecution case person, then in that case your LUT will become void ab initio. Right, when you go for a bond, you have to give a bond of the total amount plus you have to give a bank guarantee of 15% of the bond amount. Are you clear with this? Okay, then do you recollect while doing export of services we had studied that payment can be received in foreign currency, convertible foreign currency, or in some circumstances it can be received in Indian currency also. Okay, so one thing is, when you are doing any transaction with Nepal, Bhutan, since we have a rupee trade with them, you can receive the consideration in Indian currency, no problem in that. Okay, for other countries, if that country's bank has opened a Vostro account, okay, means it has opened a rupee account with an Indian bank here, then we can receive the money in Indian currency because it is specifically permitted by RBI. Example, my client is in USA. His bank is Bank of America. Bank of America is opening a rupee account with Bank of India here in India. Then any payment made from Bank of India account, that is allowed. Even if that is in Indian currency, that is allowed because the payment has been done in lines with the RBI guidelines. Are you clear with this? So when the payment is done through a freely convertible Vostro account, or when the payment is done through special rupee Vostro accounts, okay, which are opened with authorized dealers here in India, if it is permitted by RBI, then no problem at all. And in case of export to Nepal and Bhutan, it will be, even if the payment is received in Indian currency, it will be considered as export. Okay, that is the only exception given. Rest all the provisions of export will apply. The only exception given is they can receive the money in Indian currency. Are you clear with this? Yes, this was all about your transactions for import and export under GST. Yes.